Hello and welcome to the trade on this Monday. All right, before we get into the charts, let's take a look at what is making news and what traders are watching. US President-elect Donald Trump saying in an interview on the weekend he will not try to replace Federal Reserve Chair Jerome Powell upon taking office in January. Fed officials appear on track to cut interest rates this month after data showed US labour market remained strong, although the unemployment rate ticked up to 4.2%. And Donald Trump calling for an immediate ceasefire in negotiations between Ukraine and Russia to end the madness, as he referred to it, prompting Ukrainian President Volodymyr Zelensky and the Kremlin to list their conditions. Oil prices have fallen more than 1% and cemented weekly losses as analysts predict a supply surplus next year on weak demand, despite an OPEC Plus decision to delay output hikes and extend deep production cuts to the end of 2026. Copper prices, they touched the three-week high on Friday, boosted by declines in Chinese inventories and concerns about supply of raw materials after a treatment charge deal was agreed. And gold prices inched up on Friday after the November US jobs growth report suggested the labour market continues to ease gradually, leaving room for the Fed to cut rates more. And also gold boosted by those geopolitical risks, in particular over the weekend with news that the Assad regime has collapsed in Syria. Well, let's get into the technicals now. Gary Glover joining us from Novus Capital. Gary, good to have you back on the show. Welcome back.
Hi, Andrew. How you going?
Very good. And, well, as our markets, it would seem too, you take a look at what's going on in the US, record after record. What are you seeing at the moment there, particularly on Wall Street?
Yeah, look, seeing some massive technical levels ahead here, which I consider sort of very strong resistance levels. So I guess what I'm seeing here is across all the indices, the Nasdaq, the Dow Jones, the S&P 500, they're all basically approaching major expansions there. So what I mean by major expansion is sometimes when a market pulls back, like it goes through a bear market phase, market will often expand the size of that range. And a lot of highs in history come in on those expansions there. So at the moment, the Nasdaq here has expanded out. That pullback there's now basically expanded out to the 161.8 expansion there. So literally, it's made up that full range and now expanded 61.8. So the Nasdaq does, like the S&P 500, does have a strong history of expanding to this point and having and this level being pretty important sort of resistance. So just interesting there that we're sort of touching distance away here, probably within 1 or 2% here of that really key technical zone there.
Okay, need to keep a watch on that. So yeah, therefore, what are we seeing on the S&P 500?
Yeah, S&P is sort of similar there. So that's now expanded like 100% of that range. So if you think about the 22 high there, 4,800 down to around 3,500. We're now sort of within touching distance of this of that expansion. And if we look back, look at the recent highs there. All the recent highs in the last probably 10 years have all come out of, have all basically key Fibonacci levels out of the 2007, 2009 bear market. So like the 2015 high was a 61.8% expansion. Took a year to break that level. And I think the index pulled back 15%. 2018 was the 150% expansion, 2941. Took 6 months to break that level. Had a 20% correction from there. 2020 high was a 200% expansion of that range. It took 6 months, had a 35% correction. So the 22 high was at the 350 expansion level. Took 2 years to break that level. And it had like a 27.5% correction there. So the 2024 here, 6123, which is again touching distance away, only a few points, only less than 1% away here, is the 500% expansion of that 0709 bear market. And we've also got 100% expansion in this current range here. So we've just got ranges here, like anyone who sort of studies technical, the technical ranges there, the Fibonacci expansion and stuff there, we're approaching some really, really key resistance levels, which in the past have been very meaningful. So considering how frothy the market is, probably got to be a little cautious here in the next 1% here. We may be in the the final edges there. It just means you might get a pause here or correction there. We don't know how large that'll be. Sometimes they're mild. other times they can be quite meaningful. So getting a little cautious here, Andrew.
Well, it comes at a really interesting time too, Gary. Obviously, that potentially that's going to be over the Christmas break too, isn't it?
Yeah, it is there. I mean, it's oftentimes we get lulled into thinking that because markets generally sort of rally all the way through Christmas and through to January, and don't normally get pullbacks until maybe the first or second week in January a lot of the time. But in recent years, we have seen a few December highs, so got to have that in the back of our mind here that we still can get a peak here in the next week or two, potentially early. So
So,
don't get lulled. This might be the biggest trap potentially coming up here, as everyone thinks it's going to keep going.
goodness. Okay, beware. So then, what are you seeing on the Dow here?
Yeah, so the Dow's the 45,000 level is the 100% expansion of that 2022 range there. So I think it's 37,000 down to just under 29. So it's quite interesting there because the Dow hit that level a few weeks ago and it hasn't been able to break it. So while all the other indices are sort of playing catch up, the Dow has actually faced some resistance here at 45. Hasn't been able to sort of break that through. And but the thing about the Dow is you've got three ascending trend lines. So you've got that trend has been accelerating. So it's probably one of the stronger trends as well. So look, you got to respect the strength of this trend here, obviously. And obviously the momentum is with this market at the moment. So look, it can definitely go higher. And I'm not saying it can't, but some really big technical Fibonacci levels there, some expansion of ranges there, which in the past have been extremely meaningful. And we've seen a lot of highs come in on these key expansion points there. So just got me, I'd be tightening up here, I guess. Maybe taking a little bit off the top here is probably what I'll be suggesting.
All right. Does the same apply here locally then when we take a look at the ASX 200?
Yeah, we've only hit really a minor expansion there. So from that sort of 7,600 high, the most recent low down in October 23, we've expanded out to that point. We've actually just hit it just around that 8,500 there last week. So that's kind of always been my minimum target. I'm really looking for maybe something a bit higher there. If we looked at that October 22 low, that expands out to sort of 87, 8,800 level. So still I was hoping we'd actually get up there, but we have been weaker compared to a lot of other indices. But end of the day here, we're going to need materials to sort of step up here if our index can, wants to go to higher levels there. So I think the next week or two is pretty important for the resources and materials sector. If that sector doesn't stand up here, I can't see how we can push higher here. So, I think the materials sector looks pretty interesting there. It looks oversold. So maybe it can do some lifting there, but it'll need to get a wriggle on here in the next week or two.
Okay. Let's round it out with a look at a couple of stocks then. Pro Medicus. Goodness, you talk about a bull market. I mean, this is going from strength to strength. That's almost vertical.
Yeah, there's in terms of momentum stocks there, like the strongest stocks on the board, the stocks that sort of show leadership. There's something called the 50-80 rule. Is these sort of stronger stocks when they get vertical and blow off moves like this, is that 80% of these stocks will have a 50% pullback, and I think 50% will actually pull back 80% as well. So I think these stocks are pretty vulnerable there. We've already seen quite a few here. We've seen, I think it was Ordinate's already had a 72% pullback. MP1's pulled back 57%. Neuron Pharmaceuticals has pulled back 53%. EZZ's pulled back 52%. So PME, this thing is that's about as vertical stock as I've seen here. We've got about 5 ascending trend lines on a weekly. What we do there is we have got a massive volume bar there too, Andrew. That's probably looks like a sign of distribution here as well. So this stock has really been probably one of the top performing stocks there. Probably one of the most vertical stocks I've seen in a long, long time here. If we follow our momentum rules there, it does suggest there's a high likelihood that this stock could have a fairly large pullback there. So I think it's it's a fair contender to have like a 40-50% pullback from here.
Wow, okay, all right. So keep an eye on those levels. Look, another stock that's done extremely well has been Life 360, although, interestingly, Gary, today it's off by 9%.
Yeah, it's another. I think it's a big contender here to actually have a again follow our 50-80 rule here. I think it's had a really good move there. But that interesting, that range there actually from the 21 sort of high to the 22 low, we have now expanded just over 100% of that range. But this has had a fair move here. The multiples trading on, I mean, PME's trading on about 330 times the earnings. 360s on, is on a fair whack as well here. But this is a contender here to have a pretty decent pullback. We've just seen all these momentum stocks here that have really gotten vertical. Most of them that have been vertical here in March there have already had some pretty decent pullbacks. So I think 360 is another contender. As much as I love the company and the stock, really has had a pretty fast move here over the last 6 months. So it can definitely easily come back to $14, $15 here. If the market has a bit of a pullback here and that growth sector cools off, I think this is a contender to have have that 50% rule. We just know history tells us that these strongest moving stocks there, when they finish getting vertical, they have some big drawdowns, some big pullbacks occur there. So
Yes.
I'll be tightening up there. No surprise to sort of see this one have some large down days ahead here personally.
Okay, Gary, so just finally, let's take a look at Hub24, yet another stock that has, it's up some 120% this past year. Does the same apply?
It's amazing. I mean, was it $35 there at the start of the year? Now we're at 75 here. So, I don't know if this one will come back as much there. So, but the thing with sort of Hub and net wealth is they're probably outperforming the market, like a delta of probably at least 2 to 1. So if the market sold it up 10%, this thing's going up quite a lot faster. So the market does pull back, it's going to have a bigger pullback than the market as well. So again, I think it's another contender. I don't know. This one here, I'll say maybe something like 30, 40% here, but this thing's pretty vertical. It's had an outstanding run there. I think this could easily come back to $45 here. Maybe back to $50 at least there. So I think it's looks super extended here. I mean, I've never seen a momentum market like this for a long, long time actually. And I've been in the market 25 years, Andrew. So there's some. Just look at the financials; they're trading on multiples we've never seen ever. So there's probably some caution here. I just hopefully materials can step up here and hold our index up. But in that growth in the financials there's some excess valuations there for sure.
All right. Well, today's lesson then is beware. That's what I've got from the analysis you've just given us then, Gary. Look, that's terrific stuff. Thanks so much for joining us from Novus Capital.
Thanks, Andrew.
All right. That is the trade this Monday.